Hi, this is Mac with PriceActionTradingSystem.com, and this is Thursday, February 23rd, and this will serve as our chart lesson for today. Before I forget, I want to go ahead and just let people know that I'm going to be out of the office tomorrow, so no chart lesson tomorrow. I'm going to be going to watch my son. He has a ball game out of town, and I promised him I was going to come and watch him play baseball, so I will be off tomorrow. Attending one of my son's games that's out of town. So I'm just going to take the whole day off and take another extended weekend. So if you trade tomorrow, I hope we have a good day tomorrow. But let's get into today's lesson and just show you what I'm looking at today, what I saw, and see if you saw something similar or not. And here is this was basically our resistance from yesterday, same place. And here's our support, which was basically support from yesterday, 1353.50 area, and the 1359.75 area was resistance. And you can see I've got this backed way out, so I don't know if you can see, but there's the start line for 2 days ago, and here's the start line from yesterday at 3:30 when the market opened. So this little section right in here is all of yesterday's price action, and from here over is today's price action. And we're basically still in that same trading range. We broke out a little higher this morning during the overnight, which will happen, and then we broke lower right at the open this morning, and then prices failed. Prices actually moved quite a few points there, about 3 points, a little over 3 points really. But that's still a failure. As you see, it quickly reversed, got back inside the range, tested that support area a couple of times, went higher, and we've tested this resistance area 3 times, and prices have kind of moved down. So I'd really have this line down here by now. But that's kind of how it looked at the open. That's kind of how I had my setup. We had this trend line coming off the overnight. You could have actually had it like so, but you still get the same effect. But I'm going to show you something. I got an email from one of my students today, and they basically wanted to know how you handle support and resistance, because we talked about yesterday, either buying or selling this resistance was a good area, and I believe this person went long right in here at the open this morning and got tricked, and then prices broke lower, only to stop them out and then take off in the other direction again. So there really was not a setup, and I'm going to show you how I would handle that. And first of all, if you stick to our rules on the setup, there's no real good setup here. It's possible you could have got fooled on this bar, and if you did, I can see why, because we had this little overlap, this congestion that's at a strong support area. We broke lower, and it looked like it was going to fail, and so it would have been real easy to get long right here. I can see that. And that could fool anybody, even a good price action trader. But what you got to realize is that we never know what's going to happen when prices get to an area like this. But there's some clues that can usually help you. And let me show you what I'm talking about. Look what happened when prices finally reached this area this morning, right before the open. Look at all the overlap. You got 1, 2, 3, 4, 5, 6. 7 overlapping bars right there. And yeah, this support is holding, but what you got to realize is that prices are not being rejected here, and that's what you want to look for. And that's generally my rule of thumb, is that you want to look for rejection, and rejection looks like this right here. Look what happened when prices traded down here, very bearishly traded down here. That looks really bearish. Let me show you how this would have looked to you while you were trading it when you couldn't see this next bar. Now look how bearish that looks right there. That looks extremely bearish. And prices just really rocketed down here to this support area right across here. And look what happened once we got down there. We broke one tick lower here, and this thing reversed, closed all the way on its high, and rocketed on up out of here. And look, there's not all that overlap. Look over here. Look at all the overlap, the congestion, and you don't have that. This is what I call rejection. Prices came down here and were immediately rejected out of this area and rallied higher. Well, look over here today, how prices got stuck down here, and all these stems at the top is indicating there's prices are trading there, but nothing can close up there. So this market's not very strong. Even over here, prices were still able to close higher off this low, where over here nothing can really close very high. We're closing right down here on this line. So that's congestion, and that's not rejection. That's acceptance of prices right in this area, and for that reason, it's not very smart to be counter trend trading. And another clue that you could have looked for is you definitely ought to be measuring your legs, and you see this leg right here. There's your first leg down, and then you got a two-legged correction right here back to the EMA, back to what I would call the trend line. If you measure that and you drag it over here, then your second leg should trade somewhere. Of course, this is not 100%, but you should be looking for a target of down into here. And so that's another clue. And we weren't quite there yet. And we could have bounced here, and that still would have been close enough. But because we weren't getting rejection down here, that was the main thing. But that's another clue. And then let me show you one more clue. We had this trend line coming down through here. I kind of drew it off the first couple of let me back out here. Let me just redraw that line, show you how I drew it. I started off this high, and I usually try to find the first couple of bars. And you see, you could have drawn it up here, but that's too flat. Usually you're going to get a 45-degree angle is usually your best trend lines if you're going to have a trend. So that was kind of the trend line that I saw at first, was right there. And then generally I'll try to find where it crosses the last two swings. So we crossed that swing and that swing. So that's how I drew that line. And once you had that right there, you could copy that. Let me just show you. You copy that and you drag it down, and you could have had that before they opened. And look where prices reversed right off of that channel line. And that is one of your best clues to always draw your channel lines, because generally you're not going to reverse until you get to that channel. And that's exactly to the tick where it turned. And so that would have been a good idea to look for that to be your possible target. And then let me show you again. Here's the trend line I got on the bottom side when we reversed. I copied that, drug it up to this swing, and look where prices went to and where they reversed. And so that would have given you a good clue that we were looking for probably a measured leg and for prices to at least reach this line. And if you draw this first leg right there, there's your first leg pretty much. And there's your second leg, and that's pretty much where prices halted before they broke higher and they basically broke higher and tested this area right up in here, and just got stuck, and then now I've kind of traded down. And again, this was the resistance area from yesterday across here that we had. So these areas are no secret, but how do you know if prices are going to bounce here? Well, you don't know. It's a crapshoot. The odds are that they probably will if we're not in a trend, if we're in a range day. And that's another thing you look for. Look at the type day. Is it a range day, or is the market trending? And at the time, this was a pretty good downtrend. I mean, this is a good leg down, two legs, and then we were really bearish down into here. There's nothing bullish or any type of, look like any type of possible reversal. And another thing too is this was right at the 8:30 open, and a lot of crazy things happen right at the 8:30 open because all the traders, all the pin-up frustration, people are ready to start trading, and there's more people sitting there. It's emotional. There's people trying to guess which way the market's going, jumping in. A lot of fresh buying and selling coming in, and so it's not uncommon that even though this could be a range day and we're going to stay in this range all day, it wouldn't be uncommon at 8:30 for you to get a nice surge in one direction or the other. And a lot of times once you get this surge, prices just continue on, but the trend has been up, and we get a lot more up days. We've had a lot more range days, but the ranges have continued to trend higher for weeks and weeks and months, really. So doesn't mean you can't have a big sell-off day, but that's just something to keep in mind, that if you're at a strong point like this at 8:30, you might want to just wait 5 or 10 minutes and let the market settle down. And if you'd have done that, you can see by 8:45 here, 15 minutes after the open, we were trending up, and we trended up all morning, and still trying to go higher now. And we could break on out of here and go higher. We'll just have to see. But we did break this trend line that we had, and it was acting as a nice little channel here. Hopefully you can see that. But that's the best I can tell you. And you can see if you had this resistance area up here from yesterday and you traded that, you would have been pretty successful. Just even blindly buying or selling that. And but here's one other thing I'll show you. If you did get trapped right here, I mean this bar ticked higher right here and then turned and closed on this low, that's not a good sign. And so you should have exited. What I would have done, I'm hesitant to say this because next thing you know, people will be trying this and then they'll be crying that, hey, I had a loser. I was on the right side. I just didn't get enough room, and then I reversed, and I should have stayed with the original trade. And but I'm just going to tell you what I would have done. But again, I'm very hesitant to do this. But if this would have been me and I went long right there, and this bar ticked one tick higher than this bar, and I had my order there, and I got out, and my order got executed, and then it turned down right here, I would have doubled up right here and traded this to the short side, because it instantly went from a failed breakout trap, or from a failed breakout to a breakout pullback short with a trap. And it's trapped a lot of longs, I guarantee you, and that's what drove this market quickly lower before they all exited and all that momentum ran out, and then the market rallied from then on. So this is just a failed breakout that went a little further than 2 points. And there's no way to know that other than the things that I showed you before, that this was not really a good long for the reasons I showed you. This is not rejection in here. This is acceptance of these prices. Now, this is a little bit, I wouldn't even call this rejection. We're still lapping over here, overlap. And this is basically the reason these are all, kind of bundled up here and overlapping in dojis, is because it takes a while to work through this EMA. It acts like a trend line, and almost any time you're well away from the EMA with the trend and it comes back, even if it's going to go on higher, it usually stalls momentarily while it works its way through all the people that are trying to sell at the EMA. I mean, there's some people, that's all they do is wait on pullbacks to the EMA with the trend, and they enter there. And you can see if you entered right in here, you could have got a scalp out of it, and they scalp out and it doesn't go any lower, and next thing you know, they're jumping on and going the other way. But that's what I would have done. I would have at least exited right here, for the fear that I would be wrong, that it's a trap right here. But sometimes what will happen is you exit right here, and it ends up being a short trap, and you go the other way. But that's why it's almost always better to wait on a second entry off these low places, unless you get real rejection. And here's a good example. Prices broke up higher here. It looked like it was going to fail, and it didn't, and it went higher. And then you had a second entry short, and then look what happens. Boom, it's straight out. So wait on your second entry. And there never was a second entry off this low. You had a double bottom here, but look, if you'd had your order there, it never got triggered. If you had your order there, it never got triggered. And also if you had just even waited on a trend bar in your direction, it never got triggered. The closest thing that even looks like a trend bar going long is that one, and that's not a good one. But if you had your order there, it never got triggered. This is the only one that got triggered right here, and no reason to take that. It would have been better to wait on a second entry. And now if this one would have reversed and come up, that would have been a second entry Actually, no, we had a new low, but that would have been close enough to be a trap with a second entry. I might have taken that one. Uh, but even here, if you just waited on this second entry right here, look what happened then. It's an easy trade back to the trend line. So wait, when you're doing these off the, unless you're just buying blindly, and generally if you buy blindly, you're going to get 4 ticks off the bounce unless the market is extremely strong in the direction it's going. And if you'd have just had a 1 tick order right here, but let me show you something else on that about buying blindly. Once prices come down here, see how they stalled a little bit higher and then bounced? If that happens and your order doesn't get executed sitting there 1 tick in front of this line or right on that line, then get out of it, because when it bounces early like that and then continues lower, that's not a good sign either. So that's another small clue. And like right here, you can see this just went right on through. It didn't really hesitate. It did hesitate, but it hesitated just slightly, and then it broke right on through and went higher. And but that didn't happen here. We started overlapping and all this congestion, and we actually stopped early, where we didn't stop early over here. We actually got to the support or the resistance on this side before it actually found, the market slowed down. Otherwise, it was just kind of rocketing up here. So that's another clue. But let's talk about the couple of trades we had today, and then we're going to wrap this up. There weren't a lot of entries really so far through about 1 o'clock today. But the ones that there were really good. Here's your first short right after the open, a breakout pullback short. That's a good setup with a long trap right there. And that was an easy little trade down here for a couple of 3 points. Then the market reversed. And as you noticed, I marked this second entry long right here. And my expectations that we were at least going to test this trend line, and we did that, or test this breakout area again, because anytime the market breaks through, it almost always pulls back and tests that area. And this was good enough to be a breakout pullback test, but generally you're going to test it a couple of times before prices are going to continue on, unless the market was really weak. Then it might shoot on down, and it might have been late this afternoon, or it may not. It may have been tomorrow before it came back and tested this area, or it may have been a week. But at some point, it will test these major areas, and that's exactly what happened. Even though they pushed the market a little lower on this trap, it pretty quickly recovered, got back in the range, and look what happened. It tested it once, and then it tested it twice. So always wait on that second entry. So here's your second entry long. And boom, and it hesitated a minute, but if you had your order down here 1 tick below your entry bar, you're good. And it took it a little bit to take off, but it took on off. And by that time you got your swing, and you've tested this trend line several times, so you could have gone long again here. And if you didn't go long here, you probably could have gone long here, but this one was more risky. Going long here was a lot more risky, but it's the fourth bounce off that trend line. So it's probably worth taking it. But because you're going long up here at this high where we've tested it a couple of times, it's getting a little more risky. But at this point, you should be thinking, hey, we're probably coming back to test this high or these highs right here. And that's exactly where we were headed. And if you measured this first leg, that would have been another clue as well. Oops. There's your first leg, and then you move that over here, and then there's your second leg. And notice that's exactly where prices went before they stalled a little bit, but the momentum was to the upside, so it didn't hesitate long. And but that's a good 2-legged move. And then you got a failed breakout here that turned into congestion, and prices are trying to chop lower. And then here we are, like I said, now we're trying to go higher again, and we may. But my guess is that there's a good chance this could be a retest, and then we might go lower again. But anyway, you could have entered at either spot here. And then there really was not another good entry until right in here. And this is just a second entry long. This is a 2 legs back to the EMA and the trend line. And that's usually one of our best #1 money makers, even if it's only good for a scalp. And you can see if you entered here, it was good enough just for a scalp. And then prices sold off. And this was a short simply because this was a failed breakout, just like down here. This is just a repeat pattern pretty much from down here, because you would have had support right across your support would have been down in this area by that time, and you can see we broke lower, pulled back, failed to go higher, and then it turned into a little short. So you could have gone short right there. It's not a great setup, but I marked it just in case you saw it and decided you wanted to take it. And that was pretty much it for the day. It was just, this is really just chop up here, and there hadn't been any real good entries. My guess is prices are going to try to work lower and come back down this range, but we could go higher. But you see, once again, we tested that same area up there. Actually, I think this is where we had it from yesterday, somewhere right in here, and we may go higher before it's over. We'll just have to see. But hopefully that helps some of y'all with how you buy down here. And what I suggest is, this is a little more risky trade, buying strong support and resistance, unless we're in chop like this, and then it's a lot less risky. And but when the market's trending down, you need to be looking for entries with the trend rather than counter trend trading, because that's basically buying here with these nice with the market moving down strongly like this. This is a counter trend trade, and so I would have called this a trending market at this point. Even though it's only a short-term trend, it's still a trending market. And up until right in this area right in here, this was a trending market in this direction. Now I'd call this a ranging market. So now you want to be thinking range rules. So you got to be able to switch. And that's generally what happens. I'm guilty of that myself. The market will start trending, and you'll get used to trading the trend. And then all of a sudden it'll go in a range, and at the end of the day you'll realize, if I'd have just been paying attention and using my range rules, I would have been fine. But no, instead I was hung up looking for the trend, because it's been trending every day. So then you start thinking, okay, range, 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 and then the next day it starts trending again, and you're thinking range, and you get blown up again. So you got to continually monitor what the market is doing and try to determine, is it trending or is it ranging, and then you trade accordingly. But don't get don't get blinders on, because that will get you every time. And that's just the emotional parts of trading, and the thinking too much rather than reacting. And that's one thing you want to try to do. You don't want to think too much when you're trading. Obviously you need to be thinking, but you want to be reacting to the prices more than you are thinking. Just react to what the prices are doing. If they're trending up, be thinking long until you're proven wrong. And if they're ranging, be thinking range rules until you're proven wrong. And generally that will keep you on the right side of the market. So anyway, this has gotten long. It's 23 minutes, so I'm going to call it a day. Again, no chart lesson tomorrow. Hope everybody has a good weekend, and I will see you Monday. This is Mac with PriceActionTradingSystem.com, and I'll see you Monday.